Alright everyone, welcome back to Crypto Brain. Over the past few days, a development has emerged that has genuinely caught the attention of many experienced investors because some of the largest financial institutions in the world are now openly moving towards tokenization, digital assets, and blockchain-based financial infrastructure. What makes this particularly interesting is that these discussions are no longer centered solely around Bitcoin. XRP is increasingly being mentioned alongside some of the most important conversations taking place within the institutional landscape. Across social media and financial circles, one question continues to surface. Could XRP quietly become part of the financial infrastructure responsible for processing trillions of dollars every single year? When organizations such as DTCC, Euroclear, Clearstream, and major global banking institutions begin moving in the same direction, the market naturally pays attention. That is precisely why some analysts now believe we are transitioning from the testing phase of blockchain adoption into the early stages of real-world production. However, the biggest question remains unanswered. If this transition proves successful, how significant could XRP's role ultimately become? And is the market still underestimating that possibility? In today's video, we are going to break this down and examine why recent institutional developments have created such growing excitement among XRP holders. The first thing to understand is that while cryptocurrency headlines often focus on price action, institutions tend to focus on infrastructure. And when infrastructure becomes the discussion, the focus shifts away from any single asset and towards the future of the entire financial system. This is exactly why names such as DTCC, Euroclear, and Clearstream carry so much weight. These organizations operate at the very core of global financial markets. When institutions of this scale begin openly discussing blockchain integration and tokenization, it suggests that the industry is moving beyond experimentation and gradually progressing towards practical implementation. This is where the XRP discussion becomes particularly interesting. Ripple has spent years positioning itself within the areas of cross-border settlement and institutional blockchain solutions. As a result, analysts are increasingly asking an important question. If tokenized assets begin moving across multiple blockchain networks in the future, how will interoperability be maintained between those networks? That question alone has placed XRP firmly back into the spotlight. Perhaps the most striking aspect of the current environment is that institutions are no longer speaking only about pilot programs. Terms such as production environments, live testing, real-world asset tokenization, and deployment strategies are appearing more frequently than ever before. This is exactly the stage that many participants within the crypto industry have been waiting for over the past several years. Yet another important point is beginning to emerge. A growing number of experts believe the future will not be dominated by a single blockchain. Instead, it is likely to become a multi-chain ecosystem where value moves freely between different networks. If that view proves correct, interoperability solutions could become significantly more important than many investors currently appreciate. That is one reason why projects such as XRP, XLM, Link, QNT, and several others continue to attract attention from market participants. However, for XRP holders, the greatest source of excitement remains Ripple's recurring presence within institutional discussions. Every time Ripple's name appears alongside trillion-dollar infrastructure conversations, speculation naturally begins to build. Investors start asking whether these developments could eventually create larger opportunities than the market currently expects. This leads to another important question. Why are institutions moving so aggressively now? According to some analysts, regulatory clarity is gradually improving across multiple jurisdictions. As a result, organizations that previously remained in a wait-and-see position are now becoming increasingly comfortable exploring deployment strategies and real-world implementation. If this trend continues, the scale of tokenization over the coming years could be dramatically larger than what we see today. And that is where investors begin evaluating future opportunities. Historically, markets often react after infrastructure has already been built, not before. That is why many long-term investors are paying closer attention to institutional adoption than short-term price fluctuations. From their perspective, the real story is not daily volatility. The real story is long-term integration and the gradual transformation of financial infrastructure. As a result, the entire market is now watching one key development very closely. Are we finally approaching a stage where blockchain infrastructure can support the gradual migration of trillions of dollars worth of assets onto digital networks? If the answer is yes, The next few years could look very different for the digital asset industry. And that possibility is exactly why a growing discussion continues to build within the XRP community. With each passing day, more investors are paying attention to the same question. If global financial infrastructure is evolving towards a tokenized future, where exactly does XRP fit into that picture? And how large could that opportunity ultimately become? And that is really the bigger picture many investors are trying to understand right now. This is no longer just a discussion about price targets, short-term market swings, or daily headlines. The conversation is gradually shifting towards infrastructure, adoption, interoperability, and the future architecture of the global financial system. Whether XRP ultimately plays a major role, a moderate role, or something in between remains to be seen. But what is becoming increasingly difficult to ignore is the growing number of institutions exploring tokenization, digital settlement, and blockchain-based financial networks. As always, none of this should be considered financial advice. Every investor should conduct their own research, assess their own risk tolerance, and make decisions based on their own financial goals. The digital asset market remains highly volatile, and outcomes are never guaranteed. If you found this analysis valuable, be sure to like the video, subscribe to the channel, and share your thoughts in the comments below. Do you believe XRP could become an important part of the next generation of financial infrastructure, or do you think the market is still years away from that reality? I'd love to hear your perspective. Thank you very much for watching. I truly appreciate your time and support. Have a fantastic day. Stay informed, stay patient, and I'll see you in the next one.